Welcome to the Real Estate Equation. I am Ian Mayer with I Am Home Inspections. I'm here with the lovely...
I'm Liz Bushman from the Bushman team at Guild Mortgage.
We all know the excitement of you go out and you go shopping for houses, you see a bunch of different houses, you pick the one, you put in an offer, you wait to find out if your offer is accepted, you get your offer accepted, then you finally go into escrow, and we know the number one thing that prevents the escrow from closing is something goes wrong with the loan process. So today we present the top 10 tips for a smooth loan closing. Ready?
I'm ready.
All right. Number 10.
All right. Now, these are things you should avoid. All right. So, number 10, don't change jobs or switch to a 1099 or a self-employed status. That is huge. Any change in income or employment, we have to send it back to underwriting and requalify. 9 out of 10, no joke, usually do it because they are going to earn more money. And that's great. We all want to earn more money, but that usually means that they start earning commissions. A change in pay, if you did not have commissions before, and now all of a sudden earning commissions, underwriting goes back 2 full years for any type of commissions or self-employed borrowers. So that would change the whole process and not qualify you.
Yes, I worked in wholesale mortgages years ago, and I know they still do this to this day. They will actually call your place of employment and make sure you actually work there and make sure it matches what is on your loan application.
Yep.
So whatever job you have when you start the loan process, have that job when you're done. All right. Number 9.
Number 9. Don't buy a car, truck, or van unless you plan on living in it. So, don't finance a new car, truck, or van, or any sort of automobile, even like an RV, or, we have toys we want to play. That's fun. But not while you're purchasing a home. That new payment then must be added to the debt to income ratios, which, I can briefly talk about later, but debt to income ratios are a huge important, piece of underwriting and how we figure out how much of your income is going towards your mortgage payment. So, now, if you have more debt, that's going to limit you on what you can buy. 9 out of 10, again, allows you for something less than what you originally were approved for. So, unless you plan on living in it and that is now your rent payment, do not finance or even pay cash for a new automobile.
All right, so keep your same job and keep your same car through the whole loan process. All right, number 8.
Number 8, also having to deal with a little bit of credit, but do not let your credit card payments fall behind. So if they do, that's going to report as a derogatory on your credit report and alter your credit history. It's getting harder to qualify for Fannie Mae, Freddie Mac conventional lending, and it's heavily weighted on credit and past credit history. So falling behind on car payments or even credit card payments is bad because the underwriter goes, well, if they can't make this payment on time, how are they going to make the mortgage payment on time?
It's all about wanting to make those mortgage payments on time.
Yes.
All right. Number 7.
Number 7, don't spend the money you have saved for your down payment on anything. In fact, keep adding to it. Put it away. I recommend a high yield savings account. You're getting a little bit of money off the money that you have saved in there. APRs are anywhere from 3 to 4, maybe even 5% right now. Put it away. Don't touch it. Don't use it. If you start pulling from it to pay for things, maybe a wedding or buying a new car, that all goes back to how much reserves you have left over. And if you are potentially needing that money, it can go back to requalifying you. So even though you may not be using it, there are loan programs out there that do require cash reserves. So always communicate with your lender.
So don't change your jobs, don't change your vehicle, and don't change your bank account balance. All right, let's go to number 6.
Number 6, don't let anyone else check your credit score. Ooh. So who else would be checking your credit score? Well, maybe other lenders, or maybe again, you want to get that, new department store credit card. You get sold on the savings. If you open the account, you'll get, X amount of dollars off. Don't do that. Don't have them run your credit. That again is a credit inquiry, and lenders are tapped into credit agencies and credit bureaus. So if you do have an inquiry either during escrow or the pre-approval process, we're notified. And then we have to come back to you, the buyer, for an explanation. And if it's a new account that was just open, again, going back to, don't finance anything new. It goes back to, having to requalify with that new payment. These are items to avoid.
All right. Number 5.
Number 5, don't make any large deposits other than your paycheck. So what do I mean by there? Well, let's say you have, maybe you have a little cash side hustle on the side. Everything goes through Venmo, and you have a large deposit coming through from your Venmo account. You transfer that into your checking. We're going to need to source that money. And Venmo is pretty hard to source, because it's technically cash, maybe from multiple sources. So anything over X amount of dollars, and your lender will tell you what that dollar amount is. Do not deposit that cannot be sourced. Per anti-money laundering laws, we have to look at all deposits, and they all need to be explained and verified.
So that $5,000 that Prince in Nigeria is going to send me, I can't deposit that while I'm in the middle of escrow?
Well, is that Prince of Nigeria your family member? Again, lenders were taught to troubleshoot, so we're going to find a way. But it's not always the outcome that we want for you, or the outcome that we can use it. So I'm going to say no. Knowing your family lineage, I'm going to say no. We're not going to be able to use it.
All right. Number 4.
Number four is don't change bank accounts. So back to banking. This happens a lot. So fraudulent activity happens in your checking account. What do? A lot of the times you're told to stop that bank account, close it, and then reopen a new one. I get it. We have to maneuver those. But if you're just changing bank accounts to get an incentive for opening up a new bank account, then you go and you transfer all of your monies into that bank account, we're going to have to paper trail for 90 days all of those funds. So just, stop yourself the headache, wait for after you close to, if you're going to voluntarily open up new checking accounts or new savings accounts.
All right. Number 3. This is aimed at parents with adult children and anybody who's gullible.
Don't co-sign for anyone. I don't care how much you trust them. There are rules. It's not just we're mean bad people. We don't want you to help anybody else out. I have a lot of clients that have multi-generational families and a lot of co-signing of loans. Here's the general rule. If you have co-signed for someone before, make sure they make their payments on time, because you are obligatory to make that payment if they don't. That's what signing the note and being a co-signer is that you are the next person to make that car payment or even that mortgage payment. So if they fall behind, that's going to directly impact your credit. Also, the length of time that account has been open, there are some loopholes where we can omit the payment if the account is old enough. It has to be 1 year or more, and that's a Fannie, Freddie, VA, and FHA rule. So if the account is 1 year or older, and we can source that, your son or daughter or person number one that you co-signed for, we can paper trail that they've made the payments out of their account, and you're not on that account, then that's we can request for that payment to be omitted from your debt to income ratios, which helps. But sometimes people aren't on the note. You get the car in your name and then they make the payment. That's not a co-signer. So yeah, there are strict strict rules on that. So just in general, do not co-sign for anyone if you're planning on buying a house this year.
All right, good to know. Number two, do not increase balances on your credit cards. Increasing balances increases the minimum payment that you now owe. It also can dip into the percentage of credit used. So if that percentage goes higher than 30%, your credit score will go down and might not qualify for the loan anymore if you have a type of loan program that is credit score dependent. Most are, but there are people that have a lot of wiggle room in that minimum guideline. But the most people that I tend to work with are, first-time home buyers that are maybe right on the fence on that credit score. So if anything, try to pay those balances down, because if you pay the balances down, you no longer have that minimum payment, then that minimum payment can be used for the mortgage and instead of personal. All right. And the number one tip for a smooth loan closing is...
Finally, the last one. You've all been waiting for this. Now you're in escrow and you're really excited to furnish your home and get those brand new appliances. Wait to the final closing before you make those purchases. So do not, under any circumstance, finance any furniture or appliances during escrow. Going back to other reasons, they're going to probably run your credit. That's going to be a credit inquiry. And then we're going to know about it. And then we have to add that back to your qualifying. Again, that's not smooth. So we're asking for a smooth escrow. Most of my clients are asking for a smooth process. These are things you need to avoid in order to keep that smooth, right?
Right. So one thing we see is generally your washer and dryer don't stay at the house. They usually go with the seller. Mm-hmm. And refrigerator, kind of about 50-50 if the seller takes it. Mm-hmm. So you want to either bring your own washer dryer, bring your own refrigerator from your apartment, or simply just wait until after the loan is closed before you go shopping.
That's the best way. Wait till your loan is closed. And then if you have the items in the cart, you can have them picked out. You can have it all measured. Bring your tape measure to your final walkthrough so that you can measure for refrigerators and washer and dryers that are inside your house and any other appliances. So, we ask that you wait. And I'm sure as real estate agents that are watching this, you agree with me too, because you don't want any hiccups to prevent us from closing on time. And that's key.
All right. So these have been the top 10 tips for a smooth loan closing here at the Real Estate Equation.
All right. Did I miss anything?
I think we got all 10.
Okay. One last thing. If you do undergo any life circumstances, life happens. As lenders, we get it. So if your car breaks down or you get into an accident, communicate the events with your lender. So if you have to finance something new, make sure that you communicate with them, and over-communicate if possible so that they have the most complete up-to-date file. They will appreciate that. It may not be the best news that happens to you, especially if you lose your job. Don't try to, finagle a way around it. We do 2 verification of employments, 1 in the beginning and 1 10 days from closing. So we empathize with your changes in life, but we have a job to do as well. So communicate with your lender.
That's good information, Liz.
We try to provide the most up-to-date information as possible. So thank you.
All right. Well, this has been the Real Estate Equation. I'm Ian Mayer with I Am Home Inspections. Inspections that matter for people who care. 818-298-3405.
And I'm Liz Bushman with the Bushman team at Guild Mortgage here in Burbank. And our service is the difference. You can find us on Instagram at Home Loans for Heroes. And also check us out. We have our own channel now on YouTube called no less the Bushman team. So thanks for watching, and comment, share, ask us questions.
Like and subscribe.